So, good day, everyone. Welcome to our first class of Cryptverse to 6 advanced class. So, first of all, I will give you guys an introduction into CC model. The major things here is that I use the smart money concept majorly, but with an application of other concepts, take for instance liquidity and many other things as well. And I don't just use smart money concepts. I use the advanced smart money. So the CC model is just an advanced. It's just a model of advanced smart money concept. All right. So moving on. For the sake of my classes, I take them in three, focusing on three directions. The first one is market structure. The second one, market mechanics, and the last one is liquidity. Now, under market structure, you know that trading on a norm, trading is speculating the price of an asset or the rate at which an asset can be exchanged for in order to generate profit based on the direction and percentage at which price move. So based on that definition, you know that one of the major thing you need to know is the direction of the market. Now, if you know the direction of the market, you know that okay, this is the direction I want to I want to buy or I want to sell. You know that this market will either move to the upside or it will move to the downside. That is the first thing when it comes to trading. All right. When it comes to before you trade, the first thing you look into before you place your buy or sell position, the first thing you look into is to make a quick analysis of okay, where is the market going to? What is the market direction? If the market is going up, and you feel like the market is going to continue that upward movement, or you feel like the market is going to enter an upward movement, then that's where you do what? You buy. Then if you feel like the market is going to have a downward movement, that's why you do what? You sell, right? So now, to know which direction the market wants to go, right? To know the direction in the market wants to go, that's where you need your what? Your market structure. All right. With market structure, that's where you're able to identify the trend of the market, the various structures in the market, and determine when the market want to like take for instance, want to change trend and all that, right? The trend is basically the direction that the market chooses to go. Take for instance, if market chooses to go to the upside, that means that the markets have chosen an upward trend. Then the market chooses to go to the downside, that means that the markets have decided to go on a downward trend. So with that being said, market structure is the first thing we're going to look into first. Now the second one is market mechanics. Now in market mechanics, that's where sorry about that. I don't know this stuff. Now, in market mechanics, that's where you get to know where the market is coming from and where the market is going. So you get to know the reason why the market is moving. You get to know about many stuff. What's the mechanism behind this particular market? All right. Now, you don't just want to know that, okay, market is going up or down. You want to know the mechanism behind the market. And not only that, how can you just a moment. Knowing the direction you know is not just the only thing you need to know in the market, right? You have to determine, okay, where should I place my take, for instance, you cannot tell me that, just a moment. I'm about to share my screen, but I'm in a little bit of issues. All right. So you can't just tell me that, okay, market is like this. Okay, now you know the direction of the market and the market is going to the upward direction. But you can't just tell me that we just enter buy at any of these places. No, there needs to be a point that you most likely do what? You will have to enter your trade from. You know, just jump, enter market just like that. No, there have to be a particular level in the market that you want to do what? You want to enter your trade from. And to know that particular level, that's where market mechanics comes in. Because with market mechanics, you're able to understand the market, understand the mechanism behind the market, what causes price, what makes price to react, and all that. And with that, that's where you're able to get those points in the market that price will most likely find reversals, and then you use those points as your what? As your entries. So with that, instead of you to enter market from this particular place or from any random place in the market, because you now understand market mechanics, you will then be able to wait on a perfect position for market to come there, trigger you, and then move to your what? Move to the direction that you have got to based on market structure. All right. So this is the first two this that will be located. So which is market mechanics, market structure, market mechanics. Now we will be taking them gently and calmly so that we'll be able to understand them, because just because I feel like this one does not mean that it's as easy as that. There are levels to everything. I just use that simple explanation so that you guys will familiarize yourself with it and all that. Now, market structure, we have the basic market structure and we have the complex market structure. In market mechanics, we have the basic market mechanics and we have the complex market mechanics. Now, with this, you're able to like have a basic SMC this thing model that you can be using to do what? To navigate the market. But you will not be able to understand the market to some extent. I'm pretty sure that a lot of you here already have that basic SMC. But where everything take a critical step, that's the addition of liquidity. And that is why we only take basic and complex market structure with market mechanics. Then we move over to liquidity. The addition of liquidity to SMC makes it advanced SMC. All right. So if you don't understand liquidity very well, you have to understand liquidity well, because liquidity is literally all what you need to know about the market. With liquidity, that's when your SMC will become complete. All right. And that's where you can push further to the full advanced model of SMC. And not just only that, that's where you can then be able to master my model to some especially the CC model. So after you go with the basic and perhaps the complex liquidity, then we will then go back when we are taking complex liquidity. That's when we are going to talk about advanced market structure and advanced market mechanics, because it is at this point, without taking liquidity, you won't be able to understand advanced market structure and advanced market mechanics. It's after you have taken liquidity that's when you're able to understand this thing very well. Take for instance, many people, they are stuck in let me say taking 1:1 trade or 1:2 trade and all that. But trust me, because of advance and all that, I'll be able to like utilize it to even take in a place that someone will see 1:2, I will see 1:20. In a place that someone will see 1:4, I will see 1:40 and all that. So take for instance, you are trading with an $100 account, an $100 position size. Now imagine that you decide to take this trade 1:4, that will just give you $400. But that same trade, someone from Cryptverse took that trade and got made the analysis and got, let me say, 1:30 or 1:40. Simply means that, and if they are to reach the safety that you receive, it means that they will be leaving the market with what? With $4,000 instead of $400. That's the difference when it comes to advance. And for that, you need your what? Advanced market mechanics. And also, for your target, you will need your what advanced market structure and all that. So without further let's move over to basic market structure. Now, before we move over to basic market structure, the first one I'm looking into is the structure of the candle. Everything begins with a structure, and for what you can see, you can simply see that everything as regards to trading view is just it all point out to one particular thing, which is um all these candles and all that. All right, the coming together of various candles, many candles give us the what the market that we see, this trend and all that is because of all these candles. All these candles, we have one candle here, we have another one here, multiple candles and all that give us this whole trend that we see in the market, right? So now that's why we start our market structure first with the structure of the candle. Now, the first thing I want to look into, for that, I will be using the daily time frame. Now, for the structure of a candle have four sides. First of all, the candle denotes the movement of the market. All right, the candle denotes the movement of the market, and this candle, I think, it came from the Japanese. That most people usually used to call it the Japanese candle, right? So this candle is what they use in studying the market to some extent. The candle is we have two of them, the bull candle and the bear candle. The bull candle, now sorry about my chart. If you check, I am using white and gray. Please, the white candle is the traditional green candle in my case, okay? In my case, it's the white candle. But in the normal one, in the traditional way, it is the green candle. While the ash candle is the traditional red candle. All right. So with that being said, let's move on. Now, the green candle is basically the bull candle, and the red candle is basically the bear candle. All right. So over here, we now have a candle sitting right in front of us. I think I omitted a week. Uh, so now we now have a candle sitting right here. Now, for this case, I'll be using the bull candle to explain the structure of the candle. Remember, the first listing of the candle is that we have the bear candle, we have the bull candle. The bull candle, which is the gray candle, signifies a what? An upward move. Now, each and every candle represents our market was moving during that particular time. Each and every candle represents a time interval in the market. Take for instance, if you are on the 1 hour time frame, it means that each and every candle there signifies 1 hour. If you're in the daily time frame, each and every candle there signifies what? 1 day, right? So moving on, that candle indicate that okay, this was the movement of the market during that particular day. That's if it's on the daily time frame. And depending on the color of that candle, that will tell you whether that market was good or bad. Take for instance, if the candle is red candle, simply means that there was a drop in the price, or rather in the rate of that particular market. Then if the candle is a red candle, it's a green candle, simply means that there was an increase in the rate or price of that particular asset for that particular day or that particular time interval, which may be 1 hour, 15 minutes, 4 hours, and all that. So moving onward, the structure of the candle is divided into four. two actually, which is the body. First, we have the body. And the next one, we have the wicks. So this is the first division of the candle, the body and the wicks. Now the body is this one here, and this one, this fatty bubble, that is the body. Why this one, this slim guy here is the wick. All right. So I say be like broomstick, fatty bubble and broomstick. So this fatty bubble here is the body, and broomstick here is the wick. All right. Now, what does all these things indicate? The body, yes, please tell you that okay, this was the major move, and this was the minor move in the market for that particular interval. All right. Now, explain it more better, we are using the bullish candle, remember, and the bullish candle indicates that the market was good for that day. And if the market was good for that, it simply means that the market closes at an higher price. All right. So means that the market closes at what? At an higher price. And for a market to close at an higher price, it means that the opening of that particular market have to be below that particular price that it is closing. All right, have to be lower than that particular price. It means that if the market end as a the candle end as a bullish candle, it means that the opening will be at the what? At the bottom, right? The opening will be at the bottom, while the closing will be at the top, which is then indicating that that particular market closes at an higher price than it was opened. All right. Then moving on, along the way, maybe take for instance, this might be a daily candle of I think today is Thursday. Let me say this is the daily candle of Wednesday. Now, this Wednesday open, that's 12 o'clock in the midnight. This was where price was when we transited into a new day. And along the way, let me say around 6 o'clock in the morning, price went low to this particular place and then did what? Price was rejected at this particular level, thereby giving us our first point of rejection in the market. Please take note of this word, points of rejection. It simply means that this was the lowest point that price got to in the market, or rather this was a point of rejection simply means this is a point in the market that price got to, and it was what? It was rejected. That is points of rejection. This is a point in the market that price got to, and it was what? Rejected. That particular point of rejection is denoted most times by the candle using the wicks. So this was the lowest point. In this case, this is the lowest point that price got to before it was what? Rejected. And we have 2 points of rejection in the market. We do what? We have 2 points of rejection in the market. The first one is the what? Is the low, which is the lowest place that price will get to, and at that point will then be rejected, right? Then we have the what? The high, which is the highest place that price will get to before we then be what? Rejected. So the wick of a candle is subdivided into the high and the low of a candle, while the body is subdivided into the opening and the close of that particular candle. All right. Now, in the case of a bearish candle, the opening will have to be from the top, because since this is a bearish candle, you are simply saying that okay, that market closed at a lower price than it was open. So the opening price have to be at the top and the closing price have to be at the bottom for that candle to be a bearish candle. All right. So simply means that the market open here, then along the way, 6 o'clock, it pushes to this particular level, 6 o'clock in the morning. Then let me say around 1 o'clock, or let me say 2 o'clock, 1 o'clock, 2 o'clock, 3 o'clock, market fly from this place, come this side. And I think that's when we have the US session, which have one of the most liquidity in the market. So market came down to this particular place after it was rejected around 6 o'clock at this particular point, by giving us an high. Market pushed down again to this particular level to give us a low, and then what happened? Started down, came back in, rejected this particular place, came back and started dancing until towards 11:59 seconds. Market was around here, price was around here rather, when the market closed. And that was why this particular candle ended up as a what? As a bear candle. So this is basically the structure of the candle, and we'll be doing some practical example using this EURUSD. So for the sake of this thing, I will be making use of which candle now? Should I make use of that candle? Okay, let me make use of this one. So now for the sake of this, I'll be using the daily time frame candle and the 1 minute, the 5 minute time frame as well. So I think today is a new day. No, not yet. Wait, true, today is a new day. Thursday just closed in the market. Please, for those of you that are not aware, the forex market, that means for us here in Nigeria, the forex market closes 10 o'clock. That's why around 10 o'clock you will see that deep spread for the market. It is because the markets have closed and a new day have begun. And since it's a new day, the opening price will differ a bit from the previous price, thereby the previous day closing price, thereby causing that spread around 10:05 p.m. That's why it is best. So if you hear people saying avoid midnight trade of it and all that, because the spread around that time will be very high as there will be few participants in the market. And since there are few participants in the market, there won't be enough liquidity to cover up for all those spread in between the ask price and the bid price. All right, that what causes that spread. So have that in mind as we go deeper to understand this particular candle. Now, this is the daily time frame we want to look in the daily time frame candle we want to look into. This white one here. Now we're going down to the 5 minute time frame. This was for Thursday, right? So I'll be going down to the lower time frame, the 5 minute time frame, to go and show you the structure of the candle over there. That was on Thursday. Remember, I said the market closes 10 o'clock, all right? That means I want to look for Wednesday 10 o'clock, not Thursday 0000. No, you can see the time bottom under my screen over here. That's the time, which is this one in particular. The other one is the date. So I want to look for Wednesday 10 o'clock, which is the start of the first market for the day. So now there is it over here. Now, this candle is a bullish candle. This 5 minute candle that started the day is a bullish candle. Simply means that the market opened at this particular level in the 5 minute time frame, and along the way started this journey, pushed to the top side, was rejected first, before pushing down, continue down, continue on going down, going down, going down, going down, until we got to a point at the market, the market was rejected, thereby giving us the low for that particular day, which is this place. That was 5 a.m. in the morning for Thursday. That was when we got this particular low. That is the lowest point that price got to, right? Then pushing on, market push upward and gave us this push around. This was during the US session. That's 310. 310, yeah. Was during the US session. I think there was a particular news that made market to push to the upside like this. Stuff like this can only happen when there's news and all that. And this is the kind of move that market will give you in such scenario. So market pushed up and gave us this high before it was then rejected, right? So now we have an opening, which I will denote as OP. Then we have a low here, the lowest point that price got to, and like I said, I told you guys that is the low of the candle. Then we have this top here, which is the high. And then we want to look at for the closing. Remember, market starts 10 o'clock in our case. So we want to go back to 10 o'clock again. And this time around, we want to look out for 11:59, the candle before 10 o'clock, because this is the what? This is the closing. So now let's see. Now this is the candle before 10 o'clock. And as you can see, this is a bearish candle. All right, this one is a bearish candle. It means that the candle closes at the bottom here. So with this, we now have our closing, our close of the candle. Now, we now have the 4 criteria needed for a candle. So I will go back to the daily time frame to see if whether we're actually correct or not. If whether we're correct about the whole structure of the candle. Think we have made a little bit of mistake here, but you can see our low here is correct and our high here is correct. It seems like this particular market do not open 10 o'clock because it's not all market that open 10 o'clock. Like I said, forex market, but not just all forex market. Like gold opens 11 o'clock, and the crypto remains their normal time. I think some of the crypto open 1 o'clock as well, but this is around the time the market open. So let's check the actual time this market usually do what open. Since 10 o'clock did not work, I will check 11 o'clock. And just like I said, it's 11 o'clock. Wait, so. Oh, sorry. I was the one that did the mistake earlier on. Oh, was it not here? Where did I use the other time? Was it this candle? I can't even recall the candle. Wait first. I think it's this candle that I used. But this is a bear candle. Let's see, sure. So let's see when this particular market opens. Which candle does it align with? What's with that one? It aligns with this one. Yes. like I said, it opens 11 o'clock. 10 o'clock rather. This is 10 o'clock. Seems like I was the one that made the mistake. Where did I make that mistake? Yes. Sorry. I went to use 8 o'clock candle. That's 20. I went to use 2000 and 2000 is 8 o'clock. And as you can see, this one is 2200, which is 10 o'clock. So sorry about that. This should be our opening. But that does not mean that other markets open exactly the same time though. No. So this one, we delete this one. Now let's look at for the proper close. Take we also had an issue with the close. Let's look at for the proper close. Since it's 10 o'clock, I'm still doing the same mistake. That was 20. Okay, this is over here. This candle, this one here, this is it. Now, since this is a bearish candle, that means it will be at the top, right? So now let's check. Sorry about that. As you can see, we got it perfectly. This is the opening, this is the close, this is the high, and this is the low of this particular candle. So with this, we are done with the structure of the candle. Now, the next one we're looking into is market structure proper. When we look into market structure, let me see. Probably our next class is going to be tomorrow. But before that, let's ask about questions regarding to this one. We didn't start on time, so I don't want to take all our time here. This is already 10 o'clock. Just few minutes to 11 already. So I gave rooms for questions. We're supposed to take basic market structure today, but we won't be able to. We'll just take this one and rest here for now. All right. Anyone have any question in regards to what we have done so far?
Hello,
Okay,
fine.
go on.
Okay, what I have is not really a question about the time for the meeting. I don't know if instead of 10 p.m., maybe they can shift it to like 9 p.m. or 9:30.
The time for the meeting is actually 9:30 p.m.
Okay.
It was
Yeah.
because of the oldest thing. You know that this is our first meeting, and I was kind of addressing how it's going to be like, how this oldest is going to be like earlier on. That was why we spent, I think, about 30 minutes and the whole setup of a 10. But sorry about that. I think during the next meeting, everything since we already have everything fully set up now. The next meeting we just run from 9:30 p.m. to 10 o'clock or around that 10 p.m. That's when we're going to stop.
Okay. No problem. Thank you.
All right. So anyone have any other question in regards to what we have done so far? All right. Since after the blog question, we end here for now. The recording will be made available maybe before the next class and all that. So that was it for now. Good night, everyone.
Okay, boss. Thank you.
All right.
Thank you. Thank you.